August 29th, 2025. For a lot of people in the crypto world, that day started out totally normal. But by the time it was over, the markets were just a sea of red. A huge, sudden crash that basically vaporized hundreds of millions of dollars in value. So what in the world actually happened? Let's get into it.
Right, so the big question everyone was asking was pretty simple. Why? What caused this? Was it some kind of hack? A big government announcement we all missed? Well, the source material we're digging into today shows that the answer, it's not that simple.
The truth is, this wasn't just one single bad event. It was, for lack of a better term, a perfect storm. You had a bunch of really powerful forces, some from inside crypto, some from the outside world, and they all slammed into the market at the exact same time.
All right, so every storm has to start somewhere, right? For this one, the first cracks, the first signs of trouble, they actually came from inside the crypto market itself. These were the technical issues that really set the stage for all the chaos.
The first domino, it's this number, $15 billion. That was the insane value of Bitcoin and Ethereum options contracts that were all scheduled to expire on August 29th. Look, anytime you have an event that massive, it's going to create some waves as traders scramble to adjust. The market was already feeling pretty tense.
And as if that wasn't enough drama, right in the middle of all this, Binance Futures, we're talking one of the biggest crypto platforms in the world, it just went offline. Now, it wasn't for long, but the timing, it was just horrible. For the thousands of traders who were relying on it, this wasn't just some technical glitch. It was a spark that lit an absolute fire of panic.
But the trouble wasn't just coming from inside the crypto house. At the very same time all this was going down, you had these big, dark storm clouds gathering over the traditional financial markets, and that created this sense of fear pretty much everywhere.
So, investors everywhere were already nervous. You had a huge U.S. Federal Reserve meeting coming up. Inflation numbers had just dropped, and they were hotter than anyone wanted. This immediately sparked fears that the Fed might hit the brakes on cutting interest rates. Then, you throw in the sudden removal of a Fed governor, and boom, you've got some serious anxiety. And when big investors get scared like that, what's the first thing they sell? Risky stuff, like crypto.
So you have the internal crypto problems and the external money problems all crashing together. And that set the stage for the last and maybe the most powerful part of this storm, the human part. This is the moment when raw fear just completely took over.
And that fear? It came with a massive price tag. In just one 24-hour period, over $414 million worth of trades were liquidated. Just poof, gone. That's a mind-boggling amount of money just erased as prices crashed and triggered one margin call after another.
And to really understand what that number means, it means that over 127,000 different traders had their accounts totally wiped out. Each one of those is a real person who got caught on the wrong side of this violent, sudden drop.
So, where did it hurt the most? Well, Bitcoin traders took a big hit, about $73 million in liquidations. But look at Ethereum. It got hammered even harder, with $136 million wiped out. It just goes to show you that while the whole market was selling off, the more volatile altcoins, well, they took the brunt of the damage.
And the selling wasn't just coming from traders. Get this. Even Bitcoin miners, the people who are literally the backbone of the entire network, they started dumping their holdings. They were selling off their crypto reserves faster than they had in months, probably just trying to lock in any profits they could before things got worse.
The whole mood of the market just did a complete 180. The famous crypto fear and greed index showed it perfectly. We went from greed, where everyone feels like they can't lose, to just neutral almost overnight. That feeling of easy opportunity, it just completely disappeared.
So, what happened when the dust finally started to settle? Well, the aftermath showed us something really fascinating. Turns out, even when the entire ocean is stormy, not every single boat sinks. Check this out. It's a tale of two completely different fortunes. While pretty much the entire market was in a nosedive, one crypto, PYTH, actually doubled in price. Doubled! How on earth did that happen? Well, it had its own amazing news, a brand new partnership involving US government data. It's just wild proof that even in a total panic, really strong, project-specific news can create these incredible outliers. So, after seeing all this, what's the big lesson here? What should you take away? First, you have to remember that events like this, as scary as they are not exactly new to crypto. Volatility is just part of the deal.
Second, the biggest mistake you can make is selling out of pure panic. And third, if you're a disciplined investor who's in it for the long haul, these crazy crashes can sometimes be a real opportunity to get in.
And that leaves us with one final thought. In a market this wild, are you really looking for a safe coin to hide in when a storm hits? Or is the real safe harbor having a solid long-term strategy that lets you ride out the waves instead of jumping ship? Something to think about.
So, to wrap it all up, the crash on August 29th wasn't just some random fluke. It really was a textbook perfect storm, where the technical glitches, the economic fears, and good old human panic all collided at the exact same time.
And that's the story of the August 29th crash. For the full source material and a lot more deep dives just like this one, you can always head over to www.multijon.in. And hey, to make sure you catch the next explainer, do us a favor and hit like and subscribe to the Multijon YouTube channel. Thanks for tuning in.